Welcome to Markets Now. I'm Michelle Rook with Kent Beadle of Paradigm Futures. And we started off a little higher in most of the ag complex this morning. We've since turned mixed. And the reason for the higher start, Kent, was really the talk that China and the US are going to come together on some initial talks now.
Yeah, there's going to be a meeting this weekend in Switzerland, and Secretary of the Treasury Scott Bessent and the U.S. Trade Representative Greer are going to meet with their Chinese counterparts, with the goal, according to Secretary Bessent, of bringing down the temperature between the two countries and maybe de-escalating some of the tariff issues that we're underneath right now. And so, that's a really good start. We're not going to come away from this meeting this weekend with any sort of major trade deal, but if there was an agreement to reduce tariffs by a certain amount, with the idea that if talks can proceed over some period of time, tariffs could be reduced further until an actual agreement might ultimately be signed. I think that traders would see some optimism about that. Keep in mind that we're not exporting corn to China right now anyway. Our export program in soybeans is mostly ended, and we've got 5 months until the new crop program is scheduled to begin. So that's a lot of time in order to get some things done. I think it's quite optimistic that with 5 months to go until that program should start, we're actually starting to see some movement and some discussion happening right now.
We are. And we're also having a lot of discussions about other deals. And so we could start seeing some announcements there fairly shortly too, right?
Yeah, there are rumors that there could be something announced with the UK here quite shortly. It sounds as though India really is keen to get something inked as well. The Japanese are. Most of these countries would like to see all these tariffs disappear. I'm not sure that that's what's going to happen. I do think that initially some movement could happen on some of this reciprocal tariffs, and then whether or not the 10% base tariffs ever disappear, that'll be up to the president. But one of the keys is going to be some of these non-trade barriers, and quite specifically for agriculture, what are the non-tariff issues, and can we get some movement on some of those things, because a lot of them impact U.S. agricultural products in one degree or another.
Yeah. And the backdrop or the backset for this is that in March, we had a record trade deficit despite some pretty good exports on the ag side, right?
Yeah, 140 million was a record. One of the things that clearly showed is that many U.S. companies were moving quickly to try and get some things imported ahead of some of these tariffs taking place. But with the 6-month reprieve that was announced, that essentially gave us time, or gives us time, the 90-day reprieve gives us time to start negotiations. Many of those negotiations are taking place. What the trade really wants to see is, how is agriculture going to fit into some of these agreements when they're announced? And we certainly hope that those announcements come sooner rather than later.
Right. But as I point out, March exports weren't bad for things like corn, even beans, despite the fact that we were in the midst of a trade war with China. Is that going to be reflected in the May WASDE, do you think?
Certainly think it should be. Finally got the USDA to move in April on U.S. corn exports. It wasn't nearly enough relative to the pace that we've seen as of late, and really throughout the entire year. We think another 50 to 100 million bushels this month in corn. And quite interestingly, soybean exports could go up 10 to 20 million bushels as well. We're on a little bit quicker pace than we thought. We're actually competitive into a lot of non-Chinese destinations. And we've seen soybean exports just continue to run a little bit better than the pace needed to hit the USDA estimate.
We also get our first new crop balance sheets. And Seth Meyer, chief economist at USDA, said they are going to start making some considerations for the tariffs in that report. So, what do you expect?
Um, I mean, it's a great question. I I think one thing that you need to consider is where are the world corn and wheat balance sheets, and they are both exceptionally tight. And so I'm not sure that there is an awful lot of room for the USDA to do something with next year's corn and wheat export programs. And in fact, US wheat right now is actually somewhat competitive. When you take tariffs into consideration, what they have said is that in the past they would take into consideration responses from importing countries that have been announced. Well, even when the tariffs with the large reciprocal tariffs were announced, there was very little in the way of response from the world community against U.S. agricultural products. And so I'm not sure that the USDA would be appropriate for them to lower their ideas about U.S. Grain exports on this upcoming.
Gotcha. All right. So the headwind right now, though, is weather, fast planting, which probably picked up really in large fashion in the Corn Belt this week, and weather, including some rains now forecasted for the wheat belt. Is that why wheat is down this morning?
Yeah, wheat, has been since we began this conversation, it's been up and down two different times. Right now, it's about unchanged. We, we have a double-edged sword down there. Rainfall was desperately needed here, and over the last month, we've seen some of those rains develop. The unfortunate thing is that in some areas, the rainfall totals have been as much as 6 to 12 or 13 inches. And that's a little bit too much. We have a lot more rain coming, and the way that the weather pattern is set up, it appears that at least for another 10 days, you're going to see sizable amounts of rain through the southern plains. We have to start worrying with the wheat crop heading out whether or not we're going to start to have some scab issues. And we haven't seen whether or not that's occurred yet. That's what you're going to find out as we move through time. But with warm temperatures and very moist conditions, that's certainly ripe for that to develop. And if that were to happen, that could take a pretty significant toll on you.
Yeah, I don't think that the wheat trade obviously prices or factors that in appropriately. We're just off of contract lows in the wheat market. Do you think we have a lot more downside risk there?
Well, one of the things that we've seen, as I just mentioned, is that we've started to get competitive in the wheat market relative to our price into some world destinations. And our weekly inspections have been picking up. We see enough activity in world wheat exports from the U.S. to think that it's possible the USDA might have to reverse the export decline that they put in their April report and actually see that number pick up here again in May. And again, world wheat stocks to use ex-China is the tightest it's been since 2007, 2008. So, if we have a good crop here with prices as cheap as they are, we might find that, a lot of this crop finds its way into world export.
Okay. So cattle have continued to make new contract highs day after day. And even though right now we're seeing maybe a little bit of a correction as you and I talk, these don't last very long, do they? These corrections.
We've had 3 or 4 major corrections over the last 6 to 8 months. And, we're certainly due for another one here with the kind of highs that we've made. And you would never be surprised when one starts to develop. But through it all, we continue to talk about the fact that the underlying fundamentals, which is just a lack of animals and relative to the demand for the beef that is being produced, I mean, it's just, it just keeps pushing prices higher. And, we've seen that again early this week. The one thing that we're watching, of course, is box beef prices, and where is the consumer? How is consumer sentiment being impacted at the grocery case, and our consumers going to need to trade downward in value. We just haven't seen enough evidence of that to think that we've made a high yet.
No, we're at 2-year highs on box beef on the choice category. So that really speaks to your point. All right, hog started off a little higher this morning. It looked like maybe on China hopes we're fading already. So is that market, is it just going to trade tentative here until we get some actual movement or progress?
Well, of course, if you got a Chinese deal eventually, being the world's largest pork consumer, you think that U.S. pork products could play a part, similar to the way soybeans could play a part and help solving some of those trade deficits. However, I think right now the hog market is more concerned with how is pork value, what's going to happen with hog production here in the short term. Keep in mind we got some pretty hot temperatures starting to roll in, and our consumers trading downward, and if they are trading downward, it's going to be very positive for pork demand. And obviously supplies are still down. Where slaughter's down about 2.5% year over year, and seasonally we tend to still be moving higher here into June and July. So I think what we've seen here recently after after a big break is a good rebound that has given hog producers an opportunity to hedge some of their margins, and I think that's resulting in some of the weakness we've seen this week.
You bet. A little hedge pressure. That makes total sense. All right. Thanks so much, Kent Beadle with Paradigm Futures. Remember, futures and options do have substantial risk. This is Markets Now.